Bitcoin crashed to 94,000. Hundreds of major US companies are going bankrupt, and the White House is shaking up tariffs on the food you eat every day. If you want to understand why this week could set the stage for massive opportunity or danger, then stay locked in. You don't want to miss this. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, stay disciplined, and of course, stay ready for opportunity. Let's dive in together. So today we're covering three critical stories shaping markets right now. First one is going to be Bitcoin sliding toward 94,000 or crashing towards, and what that tells us about the market strength and potential weaknesses. The second one is going to be 655 US large companies have already filed for bankruptcy this year, the highest in 15 years. And number three, Trump is set to sign an executive order reducing tariffs on beef, tomatoes, coffee, and bananas. We'll connect the dots so you can see how Bitcoin, corporate risk, and policy all intersect this week. Remember, this is not financial advice. It's for educational purposes only. So, Bitcoin crashing to 94,000 isn't just a number. It's a psychological and technical threshold. Investors are watching this level closely because it represents a key support zone for midterm holders. And technical analysis note that the 50-day moving average has been flirting with a critical level. If Bitcoin breaches 94K decisively, it could signal deeper weakness toward about 84 to 88K. Possible reasons for the dip: market liquidity tightening, profit taking from short-term or long-term traders, global macro uncertainty, and the U.S. credit environment. But don't panic. This could also be an opportunity for disciplined hodlers to accumulate at lower prices. Historical data shows volatility can precede explosive rallies, especially when markets are shaking out weak hands. So, some actionable takeaways for you. Review your risk management. Are you holding secured in cold storage or multi-sig wallets or IBIT? For traders, define stop loss levels and avoid emotional distress and decisions. And remember this long-term cycle. Use history as context, not a guarantee. Bitcoin shows us the market pulse. Now let's look at what's happening in the broader US economy because corporate bankruptcies are screaming warning signs. Like I said, in 2025, 655 large US companies have filed for bankruptcy. That number is the highest in 15 years, and the pace isn't slowing. August had 76 filings, and then we had 68. This includes major players across industrials and retail and consumer factors, supply chain risk, inflation, and so on. So this tells us corporate America is under pressure, which impacts risk appetite, lending, and investor confidence. For Bitcoin, macro stress often drives both fear and opportunity. Historically, volatility in traditional markets can coincide with institutional accumulation in crypto, but it can also trigger short-term panic. So remember, track monthly bankruptcy filings for sector sensitive, just to see consumer spending, and consider liquidity and optionality. Do you have cash or crypto ready for opportunity or defense? For long-term hodlers, well, use this as context. The market is shaking out weak hands. While companies collapse, Washington is making moves that could shift inflation and risk management or risk sentiment in general. So, watch this. The White House says Trump will sign an executive order to reduce tariffs on, like I said, beef, tomatoes, coffee, bananas. So, does lower tariffs reduce costs for consumers, ease inflation pressure, and support discretionary spending? I think so. For Bitcoin and financial markets, though, when inflation pressure eases, risk assets often get a short-term boost. Traders watching the macro landscape will adjust positions accordingly, so I hope you do. Even if small tariff changes can shift investor sentiment, especially in food-sensitive sectors right now, which indirectly affects markets, risk-on, risk-off dynamics, that'll be helpful. So you need to watch how this policy affects consumer prices and CPI prints in the coming weeks and months. Evaluate how macro risk flows could impact crypto sentiment and Bitcoin price movement. And stay informed on this channel. Policy can pivot quickly and reaction times matter, so make sure you watch. And let's be clear, it's been a rough financial week. Bitcoin down, bankruptcies rising, policy shifts in motion, labor market is terrible. But it's time to pause, reflect, and plan. Use the weekend to review your holdings, check liquidity, and prepare for the week and months ahead. Discipline over panic. All right? Don't let emotion control you. Review your risk management. Adjust your allocations only if it aligns with your long-term plan. Stay disciplined. Market cycles always bring opportunity to the prepared. I want to hear from you, though. Which topics concern you the most? Bitcoin crashing and hitting 94,000, the surge in corporate bankruptcies, or the tariff reduction on key foods? Comment below and let me know your thoughts. I'll read everyone and reply with the most insightful responses I could give you. So remember, this content is for educational purposes only. It is not financial advice. Always do your own research and consult maybe a licensed professional, not some guy on the internet. But I feel like I do a good job. If you got value from today's episode, like the channel, subscribe, hit the bell so you get notifications, and share this with someone who loves top tier Bitcoin and market financial insights like yourself. Well, that's your daily hodl. Stay sharp, stay disciplined, and as always, lead, pray, hodl. I'll see you in the next one.